Welcome back to the Dividend Diplomats YouTube channel, guys. You've got Bert, the Hurt Man, the Hurt Locker, the one, the only, and Lanny, Two Manny. Yes, I'm calling you out there in the comments, brother. And we've got two stocks that I'm watching that I might be buying and adding shares to my portfolio to two current dividend stocks that I own heading into this last week, first week of May.
Smash that subscribe button. Give this video a thumbs up. Holler at your boys. Let's see, everyone. Let's reach financial freedom together, one stock at a time. And that's what's going to be so cool about this video. We're going to feature two stocks. We're going to run them through our stock screener and see why they are high up on Lanny's watch list and why he's looking to buy.
Yeah, and you guys keep in mind, our dividend stock watch list is fairly simple. We look at the price to earnings for undervaluation, take the share price over projected earnings. Want to see it below 18, want to see it hopefully below in their industry. We look at the second metric, the dividend payout ratio, projected, 12 months dividends over those projected earnings. Want it below 60%. We look at dividend growth, guys, history of growing dividends. Then we'll look at the dividend yield. So, Bert, I own these two stocks, two different industries here. You know, one, yeah, they're in the same industry as Walgreens, but they're fairly more diversified than Walgreens. The other one is in the hot topic real estate investment trust or REITs, because again, interest rates are here to stay higher for longer than what we're expecting. I think the next rate cut now is moved off of the June map and probably later in the year. But hey, still got to get through May to see if May brings data. Maybe that brings it back on the table for June. But now signs are pointing to later in the second half of the year, possibly for a cut, which means higher borrowing cost, lower cap rates, lower margins, and profitability for REITs. Um, let us know too, guys, if you guys been buying REITs. Bert, I know you've been buying
Mhm.
American Towers, right?
Yeah, it's been, and I cooled off from buying Realty Income. It's been a hot minute, but I'm still liking them in the low 50s too. So those are my two big REITs I've been scooping up here.
Bert's been buying the REITs, and I've been grabbing shares of this company every now and again because it's just not that much capital. It's one, that has occupancy over 99%. 99% of rent was also collected in the first quarter. So it's one that I feel like has, obviously nothing but positive signs about what's going on within their real estate business.
Yeah, it's
So
exciting.
Bert, you own this one stock at least, right?
Yes, the first one for sure I definitely own. And I own their competitor too. So I own both of them. I have most of the corners covered here in the suburbs between the two of these investments.
Each day. I like that joke.
Yeah.
We're talking CVS, ticker symbol CVS, guys. And I think a week or two ago, we mentioned that, oh, we really would like them. Well, first they just cracked below under 70.
Yep.
Now they're at 67.33. And I think we were saying, oh yeah, under 67 is kind of the ticket because then you'd get it around a 4% yield, right?
Yep, that's right. That was the mark that I was talking about. And yeah, they're dropping in price, and the metrics are looking actually pretty solid now that that price is falling. Their price at the time this video is 67.33. Those forward earnings 830, PE ratio 8.11. You know it's rare when the PE ratio is that much lower than the EPS.
Yeah, very rare air indeed, guys. Right now the payout ratio to paying out 66.5 cents per share per quarter, or 266 per year. The payout ratio is only 32%.
Yeah,
So in bird's eyes, my eyes, you can cut earnings in half and they could still pay their dividend.
that's right here. And their dividend growth is interesting. Its 5-year dividend growth rate is 4.99%. They've increased it for 3 years. So obviously, that 5-year growth rate is impacted by that lull period where they didn't increase the dividend after that Aetna acquisition. They took, instead of increasing, they were very clear, spend a few years, pay down debt, pause the dividend increases, still keep the dividend where it was, which was very important here. And then once they were comfortable, they're going to start juicing up that dividend again. And that's what they've been doing over the last few years.
Oh, yes, that is bringing down, as Bert said, the dividend growth rate. So now that they're down almost 17% this year in 2024, the yield is almost 4% at 3.95%. So gosh,
Yeah.
it is right there. It is hot and high on this watch list.
Yeah, and it's 1% over its 5-year average dividend yield too. So another potential sign of undervaluation.
Couldn't agree more. So, guys, that's CVS. PE of 8, payout ratio of 32%. Few years of growing their dividends at an average rate, quote unquote, of 5%, but it's really been double digits. Yield is almost 4% for CVS, guys.
Beautiful. So let's move into that second company here, Lanny. Who is this mystery REIT that you've been
Guys,
scooping up shares of?
bringing them back. Obviously, do your own research, guys, on it. It's a smaller REIT, but we're talking back on Broadstone Net Lease. BNL is the ticker symbol. They're at $14.35. Yes, the stock yields almost 8%. So I'm ripping the band-aid off of the yields that you guys know full well. Not heavily concentrated in this stock, but it's a stock that I like because first quarter rents that like they announced 99% was collected in the first quarter. Over 99% of their 795 properties is fully leased up as well. So they've
Yeah,
got almost 100% occupancy, almost 100% on rents collected.
that's what you want to see, especially when you're looking here at that REIT. And let's run them through the screener here. Let's talk through this. Let's see what their price is. That price is 14.35. What are we seeing here for this first ratio, Lanny?
So we're going to look at AFFO or adjusted funds from operations here, guys. It was $1.41. Waiting on their next earnings release still for BNL, waiting on a dividend increase as well. So the price to AFFO is about 10.
Oh, nice. That's beautiful. I know that's below realty income, which is in the mid-teens. So that's a nice little discount there. That annual dividend before this increase is $1.14. That gives you a payout ratio of 80.85%. Again, though, remember, REITs are required to pay out more of their earnings. And even though there is the difference between earnings and AFFO, payout ratios are typically higher in the REIT sector because of those large payout requirements.
Exactly. And yeah, they've been increasing their dividend pretty much 2 times a year. Um, so in 2023, they went from 27 to 27 and a half, 27 and a half to 28. So it was about a 3.7% increase overall year over year, end to end in 2023. 2022 is about 5.88%. So we might see somewhere in that 3 to 3.5% here in 2024. I'm expecting. They're already at 28.5 cents, but again, the next announcement should be the one that stays for the next 2 quarters. So we'll have to see if they go from 28.5 cents, to 29 cents. So guys, a couple of years of growing dividends here.
Love it. And it's nice too. You get a nice little yield premium here for BNL. Their yield is 7.94%. So you get rewarded for holding their stock.
Get paid to play here, guys, with BNL, guys. So all you income investors, check this one out. So guys, that's BNL. We're gonna throw both screens here on both screenshots here on the screen. Again, BNL's 10 on the price to AFFO, 80% on the payout ratio, yield almost 8%, dividend growth. Yeah, I call it somewhere between 3.5 to 5%, I would say right now. Currently looking at CVS, if they hit below 67 in that 66, 67 range, I might grab a share. BNL might grab just a couple more shares possibly for the portfolio to give it a little juice. But let us know what you guys think of these two different stocks. Do you think these stocks are stocks to buy right now?
If you haven't already, subscribe to the channel, give this video a big old-fashioned thumbs up, and remember, if you're not with us, you're against us, Jack.
That was Bert and Lanny from the Dividend Diplomats. Over and out.